Welcome back to another video. In this video, I'm going to talk about range days and how to anticipate a range day. Now, you're never going to be able to get it 100% correct, right? Every single time that there is a range day. We just have to make the assumption that that is what's going to happen. So for example, today we had a pretty rangy day because we were trading, sorry, on the NASDAQ, we were trading inside this day, right? So we can expect some ranginess in this when you have an inside day, okay? Which means we don't open and move up and we don't open and move down below the previous day's low. Now, typically, if you have a massive drop like this, you're going to experience some ranginess. Okay. You're going to experience some chop in the morning, and then price will eventually fall into some sort of direction. Now, when you have like higher time frame markets like up in this area, you can expect all this ranginess. Now, it doesn't mean you can't play it. The days you don't want to play is when you get immediate price action starting off with a day. The opening candle is like a doji. When you get that, most of the time price is just going to chop around and then maybe move in one direction and not give you an entry. Or if you see the market do this type of pattern all day, right? If you see this, it's just a range day, right? And we can play all this, you know what I mean? Typically that's going to happen on an inside day or after a large drop, right? So I don't know if you've ever seen something like, let's say in the Forex market where you see a huge drop and then a bounce like this, and then it just starts going sideways. So when you see that, that's typically going to signal ranginess for most of the session, and then towards the end of the session, a continuation, right? Depending on how this schematic is formed based on like some Wyckoff or whatever. But all we're really looking for is that break in structure and like that, or the opposite way. So that's how you can kind of anticipate a range sort of session. And you just want to be wary of that type of day because that means that you should be taking profits fairly quickly. Now, let's say on a day like this, where we take out this trendline liquidity and we're just moving up, bullish, 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 right? Like we can see how these candles are forming, right? Like from here, we opened and engulfed. So to me, that's just like a straight up buy signal, right? We engulfed this right here. Here, we reacted from this order block. We went up, went back down, opened up here on the previous days, open pretty much, traded a little bit down, and then ranged up, moved up, sorry, into this inefficiency. So of course, we're going to get some measure of a pullback here. And then this candle, we opened up at the previous day's close and went down and filled the inefficiency and then moved back up. And then today we opened down, retesting the wick of this day, creating an inside day, right? So I still am kind of bullish on this, to be honest. I may be wrong, but I feel like we should come up to at least this level here and fill that. Maybe come down a bit, take the previous day's low, and then move up. But we just got to kind of have an idea of what we're trying to do with the markets on that particular day. But range days are completely fine to trade too because we're not trying to capitalize on this whole movement, remember. But if we are bullish and we're breaking structure to the upside, you know, all throughout this, all these structural breaks, all these lows you could be buying at. You could be buying at this order block. You could be buying at this order block. Like it's just the way the market moves and how we can align ourselves with higher time frame stuff. All right, that's it for this video.